Hey, today is May 4th. It's the second day of the month. I took two trades today. Both were on Apple. Both were Apple puts. Both of them worked out. One of them worked out really nicely. The other one, just a small winner. But essentially was the same thesis on both trades. I just re-entered the second time. So as always, I don't, this was on Apple. I don't really think there was a higher time frame analysis, but I can just check. Yeah, so this was today's drop, but essentially on a higher time frame, we've been consolidating, and we finally got below this key support area around 130, 131. Uh, but this was happening for a lot of equities. In pre-market, a lot of the equities were gapping down. So my job was essentially finding the stocks with the most relative weakness. Um, so definitely not looking to play this to the long side. I was only looking at short positions, and hopefully I was hoping that one of these demand zones. I really wanted daily, but either 1 hour daily demand to act as a magnet for price to go lower. Because as always, institutions bought here, and they're not going to buy at a higher price. They want to get their liquidity filled, and that's why we move lower into demand before bouncing out. But let's go down to an intraday time frame where I can really analyze why I entered, where my stops were, and entries and exits and all of that. Uh, so what caught my attention for Apple uh, was the first 5 minute candle. This first 5 minute candle on Apple was straight red, huge red candle, talking like a $2 move on Apple, which is insane in a 5 minute period. Upper wick, even better selling pressure. No bottom wick, no buyers present at all. Uh, Look at the wick for, or look at the candle for NQ. It was aggressive, but it did have a lower wick. Look at the candle for ES. Um, it was green actually, and it did have a lower wick. So you can see that sellers are very interested in Apple. So I'm trying to formulate some plan targeting 1 hour daily demand because I know these two zones will act as magnets. And I'll go over this later, but look, we come into 1 hour and we start bouncing out. But what I saw ES and NQ aggressively selling off. Carmine was talking about this as well. There are no buyers in this market. This is a bloodbath. This is a straight move down. No way in hell I'm going to play anything to the long side after seeing such an aggressive move lower. Uh, so uh, because ES and NQ were selling off so aggressively, and we had demand, 15-minute demand here, 90-minute demand here, I did not play this drop base drop. And it worked out perfectly in hindsight, but we're right next to demand. We're right next to 15-minute demand. We're right next to 90-minute demand. So I did not play this drop base drop. But now things get a little bit more interesting, and this is really the key point I want to cover in this video. I really want to go over context of the market. So just looking at ES quickly, we uh, okay, yeah, just looking at context super quickly, look at what ES did. It killed one demand zone right here. It killed the second demand zone right here. It killed this third demand zone right here. So ES just aggressively wiped out 3 demand zones. So I know buyers are not present in this market. What did NQ do? NQ broke through this 45-minute demand, and there's absolutely no reaction here. This is just a straight slice through. Same thing for 90-minute. There's not one green candle in demand. This is a straight bloodbath. We killed 2 green candles here. We killed 2 demand zones on NQ, 3 demand zones on ES. So what I saw here was this flag pattern right here. So I saw a lot of confirmations for this Apple trade. The first one being signs of relative weakness. And Apple is one of the biggest parts of ES and NQ. And so if Apple is weak, it's definitely going to bring down ES and NQ as well. So that's one confirmation, Apple being relatively weak. The second confirmation I saw was this bear flag pattern. This is a classic bear flag for move lower. So that's two confirmations. As always, volume is my favorite confirmation. And look at this. This is what you call nice and consistent volume. Volume is not selling off. We're having these volume spikes. We know that sellers are clearly in control. So that's three confirmations. The fourth confirmation I had was 1 hour and daily demand acting as a magnet. And I cover this a lot, but higher time frame zones will always act as magnets for price to go through because institutions need to get their liquidity filled. So I had four confirmations. I'm going to take this trade. And now I quickly want to run through what the caution factors are. First caution factor probably being that there really isn't any key level here, but that's fine because I know instead of a key level, a zone is going to act as a magnet. Um, the other caution factor I want to go over is given this amount of data, it looks like ES is bouncing out of 4 hour demand, right? Um, we had a nice bullish engulfing candle. We had a nice lower wick out of demand. Um, so one of my rules is if future is inside of demand, then why would I take puts? But this is where context comes into place. ES killed 3 demand zones. NQ killed 2 demand zones. Straight move down. So when sellers are that aggressive, what are the chances that it's going to bounce out of demand? It's very, very low. So that's why I wasn't worried about 4 hour demand on ES, and that's why I wasn't worried about 45-minute demand on NQ when taking this play short. So now entries and exits. Let me just highlight this for you. I entered right here. As soon as we broke low day, I was in. This is the importance of scaling out on the way. So I didn't exit on the candle I entered on. I exited at the bottom of this 10-15 candle for a small 20-cent gain on one contract. I did scale up to 3 contracts because the contracts are very, very cheap. So I did take one off here. And then as always, when I'm in profit, I move my stop to break even. So I had to respect my stop. And I ended up losing like 5 cents on these last 2 contracts. But that's not a clear place of where I exited. I exited right. Exited right here. Right when my contracts were back to break even. So this is the importance of scaling out on the way down because you need to protect yourself. I mean, if I was saying that, okay, if I'm playing the traditional risk to reward method and I say that, okay, my target is daily demand and I don't want to hold through consolidation, well, then I'm going to get stopped out almost every single time. I wouldn't have been able to capitalize on the small move, but because I was able to scale out on the way down, this ended up actually being a small winning trade. Nothing significant, still down on the week from the bad trade I made on Monday, but this did give me a little bit of a confidence back. But I'm saying this. Make sure you scale out on the way down, especially when you're playing with more than one contract, just to protect yourself. So what did ES do? ES did actually bounce for a bit, but then what happened? It got killed. Why is this? Because sellers are so strong that no demand zones are going to be respected today. Not at least until maybe lunch hour when sellers give up. They all go to eat lunch from the money they made on this move down. But especially in the morning when we have such an aggressive move up, I'm telling you, demand zones are not going to work out, and I'm not scared of demand zones when looking at the context. So that was the first play on Apple. The break of this bear flag. The second play was a break of 128 intraday resistance or intraday support. So price level 128 is clearly support. You can see that it holds it here at 1010, at 1015, at 10:50, and I was about to execute this low day break at 11:05, targeting 1 hour demand. Still the same thesis: relative weakness, market getting killed, um, uh, or a support break, demand acting as a magnet. So still the same confirmations, but I did not execute at 11:05, and the reason why is because of this volume now. So volume, while it is still consistent, you can clearly see that volume did decrease. So that's telling me that there's no steam essentially to carry us lower. If there was increased volume, increased momentum towards the downside, then I would have taken the break at 11:05, but I didn't see that. And one more thing I saw is 11:05 is here, so let me highlight that for ES. I I knew sellers were definitely present, and I knew this demand zone wasn't going to hold. I just didn't know when that would have been. And right here at 10:50, where we or 10:11:05, where we had this lower day break, I saw these bottom wicks on ES, so I knew buyers were still present. So those are two caution factors for me: decreasing volume and us still holding this 4 hour demand. So now the setup of this has gone down. It's a lower quality setup. So that's why I avoided executing at 11:05. And that's probably what I'm most proud of, recognizing that there were two caution factors: um, clear buying inside of demand and decreased volume. So that's why I avoided executing here. Um, I was planning to walk away. At this point, I brushed my teeth, I ate breakfast, getting ready to start my day after trading. But uh, this is what I saw, and this is where I entered short. Look at this candle on ES. Huge red candle. We just broke through 4 hour demand. This is what I was waiting for. This is what I was waiting for on Apple. Look at what happens to the volume. Let me just highlight this for you. Look at this. Volume starts to increase now. So now our sellers are clearly present, and they're willing to take us lower. So as soon as I saw this huge drop on ES, um, this was an 11:10 drop. Um, we we were faked out at 11:05, but sellers brought us right back down. Where I entered was right here at 11:20, at the start of 11:20. I, no, my bad. I entered at the start of 11:15 after seeing this huge drop. And you have to keep in mind that, okay, we have demand right here. Why am I taking puts knowing that we have demand? Well, one, as I talked about, the market was super weak. Four demand zones. I mean, you can remove this demand zone on ES now. So four demand zones on ES are killed, and three demand zones on NQ are killed. So I am not worried about this demand zone at all, considering the fact that it is used. I know that the closer we are to demand, the closer price will attract it as a magnet. And I mean that's just how magnets work. The close if something is has magnetic capabilities, and the closer it is to a magnet, the closer it is it's going to be attracted to it. If that makes any sense. But I did enter right here. I Same position size, 3 contracts. I took my first contract off right here. Just protecting myself on the way down. So I exited 1 contract right here. I still have 2/3 of my position left. You can see that, yes, ES temporarily bounces, but as I always talk about, demand zones on very weak days are just pullbacks for sellers to take us lower. Oh shit. So yeah, we eventually roll over, and this demand zone tends to work out. But you have to keep in mind that because Apple is so weak compared to the general market, um, this is a very high probability of working out. So I take one off here. I take my second contract off after I see this bottom wick right here inside of 1 hour demand. Um, but as always, the higher time frame the zone is, the stronger it acts as a magnet. So I'm still holding 1/3 of my position to see if we can reach daily demand. And then I take my final contract off right here after seeing this huge lower wick on Apple after seeing this classic low day fail inside of demand. After seeing this low day fail inside of demand, I know that buyers are definitely present here. And at this point, I mean, I've held Apple for 5, 10, 15, 20, 25, 30, 35, 40, around 50 minutes. I mean, I never hold a trade this long, so I'm not used to holding for this long. But I was very, very patient with it. I saw this low day fail inside of demand. I saw this huge bottom wick on increased volume for Apple. So I didn't wait for my final target of daily demand. I just exited. And I mean, let me see where Apple is right now. Oh, so it's approaching a low day. And I wouldn't take this low day break now. Just in some real time analysis, volume is decreased now, and look at the risk to reward. How much are you risking to get to your target of daily demand right here? Uh, yes, still above this demand, so buyers are present here. NQ, I mean, I'd have to scroll out, but I don't know where we. Okay, we have demand a little bit lower, but um, when we don't have demand zones, when we have demand zones this far away, price is going to gravitate towards them. 16 minutes, damn. Okay, I didn't want the video to be this long, but I mean it is, and I did make some of the loss back for this week. Still down, but close to break even. Hopefully, I can turn my week around in a couple of days.